Insurance. It is a hot topic in real estate today, and especially here in Southwest Florida. That's why I asked our partner, Joe Mongillo from Florida Casualty Insurance, to jump on for an interview and answer your frequently asked questions all about insurance here in Southwest Florida. You don't want to miss this one. Hi, my name is Kelly Olin, and on behalf of my business partner, Amanda Boldick, we are your Southwest Florida modern luxury realtors with Residence by eXp Realty. We would be happy to help you find your dream home here in Paradise. You can reach out to us at any time at the number on the screen. You can also find additional resources, including our free relocation guide in the description of this video. Now, let's get all of your questions answered about insurance here in Southwest Florida. Thank you so much for joining us today and answering all of our questions. Let's just start with an easy one. Tell us a little bit about you and your company and experience here with insurance in Florida.
Well, first off, thank you so much, Kelly, for having me. And I'm so excited to be on your channel. And yeah, so the world of insurance. And I got started in insurance about 10 years ago. I moved to Florida 6 years ago in 2018, where we opened up an agency in Bonita Springs. So I'm bringing my Connecticut insurance experience down to Florida, which was a pretty massive learning curve because, as you've seen probably in the last 5-6 years, there's been some significant insurance changes as far as premiums, as far as carriers leaving the state, new carriers coming in. So it's been quite a roller coaster ride, in the insurance world. I moved down here with my fiance, Michelle, big in the outdoors. We love to golf. We love to fish, love to boat, beach. The whole Florida lifestyle is perfect for us, and we've never looked back. We love it down here.
Awesome. And you already kind of alluded to this, but we have seen a lot of changes in insurance, even just in the last 2 years, I would say. What has changed in the insurance world in the last 2 years, specifically here in Florida?
Well, it's a good question because back in 2017, specifically Southwest Florida, we were hit with Hurricane Irma that came through. It was a strong storm, but it was fast. And we felt a little change in the insurance world after that storm, but nothing significant. So moving down I know there's a lot of people on the west coast of Florida from the Midwest, and then on the east coast of Florida, you have a lot of people from the Northeast. They saw probably an average of maybe 20% more than what they were paying in the northern states. Premiums weren't crazy outlandish. They knew moving to Florida, there's going to be a little more risk with, more severe weather, but it wasn't that noticeable until Ian in September of 22. That's when insurance kind of took a turn for the worse as far as premiums and coverages. And a lot of carriers, whether they went bankrupt or just wanted to leave the state of Florida entirely, that's when we started to feel a lot of the premium increase, anywhere from 50 to 100%, where policies were doubling in premium. And it's unfortunately after Ian and this past year with a couple more hurricanes thrown in there, it has not been a very enjoyable year as far as insurance premiums go. I know a lot of the insureds, they're pretty upset. They're paying 3-4 times what they're used to paying. As far as closings go, I've seen closings fall through because when they get those insurance premiums, it just doesn't make sense. So it's been a pretty scary market. We're starting to see a trend in a good direction. We have a couple of carriers that came into the state. We're starting to see a little leveling off as the rate increases are dropping down to maybe 10-15%, which is still a lot higher than your normal 3 to 7 that we're used to seeing. But I do see a little light at the end of the tunnel, but it's still an upward battle.
Absolutely. And I would assume too, it really kind of depends on what type of home you're insuring. Is it a condo or is it a single family, and how close it is to the water or flood zone, so on and so forth?
Yes, that is a huge rating factor. So if we start with, let's just say, a condo, whether you're on the beach or whether you're 10 miles east of the beach. You have to look at, when it comes to a condo, what you're responsible for, what does your HOA cover. I highly recommend checking that master policy for the HOA first to see if they cover all exterior. Do they cover the roof? Do they cover just the siding? What falls under the HOA and what falls on the insured? Let's say your HOA does cover all exterior, so you're insuring your walls in. You have your contents, your furniture, your appliances, your clothing, and then you have, the structural stuff. So you have your flooring, your countertops, your cabinets, drywall. That's the stuff that you have to pay attention to. And we're seeing in a condo anywhere between $100 to $200 a square foot as kind of like a guesstimation of what, you're looking for coverage. And then from there, as far as rating goes for premium, whether you're near the water or away from the water, how new is the roof? How new is the condo building itself? Those are huge. So if you're looking at, a 2000 year condo with a 2000 roof, I would expect, anywhere from double the premium it would be if the roof was within the last 3 years. So you could go from a $1,400 premium with a new roof to a $3,000 premium with its original roof. So there's a lot of factors, as far as rating goes, but those are the kind of like the main ones to look at first, and then you can dive into all the other stuff. And then as far as a single family home, up north, you see a lot more framed housing, as far as, how the structure of the home is built with wood, where you come down here, we have concrete block, we have, mostly concrete. I mean, the roof and the second stories, I don't know if you've noticed during construction, a lot of the second stories were frame. So that's actually a big rating factor when doing a 2-story home. So if you have anywhere of your second story that's frame, a lot of carriers will basically rate that as a frame house. So I do know which something to look into as far as River Creek, where both stories are concrete, that's huge for insurance. And that'll definitely help on premium. That also, simply going from a masonry construction to a frame construction, could increase your premium anywhere from $1,000 to $2,000 a year. So something to look into. And then also, obviously the most important part is the safety aspect of having all concrete to frame. So that is a huge rating factor as far as single family homes go. And then obviously, where is your single family home located? Are you east of 75, out in the bush, or are you along the beach side, or on a canal? That also would be a big rating factor. But you have the two big things I want people to take from it, though, is the year the house was built and how new is the roof. Those are the first two huge rating factors right out of the gate. And then after that, you have your personal experiences, whether you've had claims history in the past, credit, good or bad credit, all those rating factors go into premium. But those are the first two things: year of the home, year of the roof. I would check those things first.
Okay. Well, we do have a lot of cash buyers down here, but many people are, of course, getting mortgages as well. And I know, in order to get a mortgage, you need to be able to be insurable. And we've talked about roofs before. At what age of a roof is it not insurable? Therefore, they can't get a mortgage.
Great question. So not only does age matter, also the material used for the roof. So now we're seeing a lot more metal roofs coming to the area. I still feel the majority is tile, but there are still shingle roofs out there. Every carrier varies on their underwriting how far back they'll go for an age of a roof. For instance, some carriers only go as far back if you have an asphalt shingle roof. If it's 10 years or older, they may not even offer you insurance. But the ones that do, for instance, I just did a home in Cape Coral, $300,000 single family home. And replacement cost $300,000, and the roof was shingle, and the house was built in 2001. The carrier would offer insurance for this house, I think, with the updated shingle roof was 2018. So the premium was $2,500. Now, for my own personal research, I said, well, what if it wasn't a new roof? What if it was the 2001 shingle roof? And the premium jumped to $5,700. So more than double it from an original shingle roof to an updated shingle roof. But yeah, carriers love metal and they love tile. So if the buyer could avoid shingle, I recommend it because you're going to see premium increases earlier than the others. Obviously, the replacement of a roof, shingle would be the cheapest. I understand why people go that route. But if you can afford whether going to tile or metal, I highly recommend doing that for the long term.
Really good tip. I love that. So for homeowners that are planning to get a mortgage, what kind of insurance would you recommend to them, specifically? And can you compare and contrast to maybe somebody who is paying cash? What are the differences or what kind of conversations do you have that might be different if you're having a cash buyer or if you're working with somebody with a mortgage?
Yeah. So let's just exclude flood zones right now. Let's take flood zones out of the picture. Let's say you're not in a flood zone.
Mhm.
So as far as the home insurance goes, with or without a mortgage, you're still going to get the same policy. It's going to be a replacement cost policy. You're going to have your all other peril deductible, which basically means any type of damage to your home that's not a named storm. So if you go to a named storm, if you have named storm damage, you're going to go to the hurricane deductible. And that's where it gets a little, that's where inexperience sets in because we're coming from areas that hurricane deductibles aren't really a thing, nor a fear that we have. So we don't think about our hurricane deductible. The majority of insurance policies down here start with a hurricane deductible of 2%. And what that means is if you have a $500,000 home, your hurricane deductible is going to be $10,000 before anything gets fixed. So if you have roof damage, whether it's, about 70K in roof damage, another 20,000 in screen enclosure damage. So that's 90,000. The first 10 is on the insured and the remainder goes to the insurance carrier. Now there are some carriers with flat hurricane deductibles, which I always check first. I would love to offer all my clients a flat $1,000 hurricane deductible. So in the event of any situation, they're only out of pocket $1,000. But that's not always the case. And obviously, if you go to a carrier that has the flat $1,000 hurricane deductible, there's a good chance your premium is going to be more because you're going to have less out of pocket expense in the event of a storm or any damage. And the carrier knows that, so it could be anywhere from $1,000 to $1,500 more going to that flat $1,000 hurricane deductible. But in the long run, you kind of play, it's, you do the math out. It's kind of like a gamble. How many years do you think it'll be until the next hurricane where you think, projection wise, that could cause damage to my home? Am I in a high wind pool area? We had Hurricane Ian that just ripped through, like I mentioned back in 2022, and roofs were coming off, shingles, tiles, everything was ripping off, screen enclosures were coming down. So if that happened to my clients, they happen to have that $1,000 hurricane deductible. I would feel so much better during such a hard situation, taking a little pain and a little aggravation off the table. But unfortunately, the premiums just are so high to go to something like that. It's difficult to always go that option. Years ago before Ian, those premiums were much more competitive, so it was much more attractive. And I was able to put a bunch of people in those particular carriers. But as far as the type of insurance policy you get with or without a mortgage, you just want to make sure everything's replacement cost. If everything goes to actual cash value, that means whether it's your contents, whether it's your home, you don't want a depreciated amount to replace. You just want to get it replaced. At whatever it costs, you just want to get it replaced. So I highly recommend that. It's not required if you don't have a mortgage to get a replacement cost policy, but I highly recommend doing it.
And if we can kind of shift into more of like flood zone,
Mm-hmm.
non-flood zone, which we can help advise our buyers to steer clear of specific areas depending on if they want to avoid a flood zone. But could you give us the difference and what's the actual cost value here? If you fell in love with your dream home, it's a
Mm-hmm.
$500,000 your dream home, but it just happens to be on the outskirts of maybe an AE flood zone, and it's
Yes.
not quite where you want it to be in X 500 or X, and then you don't have to have that flood insurance. But
Mm-hmm.
what is the premium you'd be looking at if it is in that like kind of borderline flood zone area where it's technically a flood zone? It might not have even been a flood zone a couple of years ago, but since they've changed that,
Yeah.
since now it is, what extra premium are they going to pay if they have to go with that home in that zone?
Yeah, that's a good question. So flood zones vary. So you have your X zones, which means it's the least likely to occur zone. That being an X. X 500. All that means is you have a 0.2% chance more to get into a flood than an X zone, which still means it's technically in a low chance flood zone. So that flood's not required there. Do I recommend it? Yes, always. Always want to make sure my clients are fully protected. But that being said, you're in a flood zone. Now, are you in a flood zone somewhere, east of 75, out in the woods or out in the bush, as I like to say, or are you in a flood zone along the beach? Now, the reason, as far as home insurance goes, home insurance policies do not cover any flood damage. But the reason why you may see an adjustment in premium being in a flood zone without is because the majority of your flood zones are going to be along beaches and canals. And the reason why that home premium might be a little bit more is because you're exposed to more wind damage being that close to the water than you are out east or out, if you're on the East Coast, more west. That's where the home insurance premiums vary. It might not necessarily mean a flood zone. So a flood zone, if you are east of 75, your home insurance premium, it'll probably be pretty close to what an X zone would be east of 75. But again, the flood insurance premium comes in now. Now you're required to get flood if you have a mortgage, and that's a different story. So years ago, FEMA rolled out a program called FEMA 2.0, and all that really meant was they don't necessarily require elevation certificates anymore if you're in a flood zone. Each flood policy now is solely written based on the individual's address. So you could have two homes in a flood zone right next door to each other, and simply from their address alone, their premium could be different. Could be the high side, could be the low side. They could be the same, but there's a chance that it could be different also. But we have, X zones near us here in Lee County. I mean, I've seen anywhere from a $500 flood insurance policy to a $1,500 home insurance policy. Yet they're both in the same zone.
In X, okay.
In X, yeah, and that's in an X zone.
So what you're saying though is, even though it might not be required by the lender, for example, for you to have flood insurance, you recommend having flood insurance even for people that are in flood zone, which is no flood zone.
I do. And I understand that's another one of those situations where you as the insured have to assess your risk and assess, your finances. And if it makes sense, get it. If it doesn't. You don't have to. So it's one of those situations where Murphy's Law, I guess you could say, if the moment you cancel that flood policy, a week later, there's your flood, and that's, they're in that area. For example, Asheville, North Carolina saw the most devastating flood, that state's probably ever seen. And that was in an X zone. So, they're in the mountains where you wouldn't think that'd be an issue. But it just with these changing weather patterns, if it's cheap, if it's affordable, I highly recommend it just for that peace of mind aspect, knowing that, let's say there's something, a freak thing happens and your home insurance isn't going to cover it. You have that $800 flood insurance policy waiting to replace, any damages, and they're livable space damages, not a garage, not something detached. It's got to be a livable space. So you have your $250,000 in dwelling coverage and your $100,000 in contents through FEMA. There are also private markets you can get where you can get higher limits in those categories. Sometimes more expensive, sometimes less. Private markets, they set the rates. They're not through FEMA. So the only gamble going with a private, market is that their solvency. If this particular private market takes a large hit, the claims process may be a little slower than going through FEMA. But that's just, again, those are all just different options that hopefully, when you discuss it with myself or your own agent, kind of just go over everything. And like I said before, I always recommend it. It's more if you're in X zone, take a personal assessment and just think, do we need it? Do we not? Is it worth it? Is it not?
hmm And if somebody doesn't have the choice, like if you were purchasing a home that is in a flood zone where it's mandated by your lender that you have flood insurance, so you don't really have to have a choice. You have to get flood insurance.
Hmm.
What kind of premium for flood insurance would somebody be looking at? Like maybe a $500,000 home in Zone AE.
Yeah, that's a good question. So again, first off, I would highly recommend getting an elevation certificate done. Usually, hopefully, the previous, whether it be this, if this is for a new home buyer, the seller may already have a copy of that elevation certificate, so you may not have to go out of your way to get one. So once you have the elevation certificate, you'll see a differential between your lowest and highest adjacent, meaning what's my clearing from the ground to the rising water. And obviously, if it's more than 4 feet or so, then there's a good chance your premium could be, pretty low. It could be that $1,000, it could be $1,000 based on your elevation. Like if your home's on stilts, that get the elevation certificate. That will help, bring
Mhm.
that premium down. So you could go anywhere from $1,000 with a very good elevation certificate, and if let's say you don't have one, it could be up to 6,000, 7,000. I mean, I've seen flood policies 13, 14 along Barefoot Beach. So yeah, they can vary. They definitely can vary, but it's 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 very important to know your adjacency from the ground.
Yeah. You mentioned the elevation certificate, and that's something that can save people money. What are some other tips that you have when they're having a home inspected, or
Yep.
just other preparation tips that will help them save on their insurance?
Yeah, yeah. So we're fortunate right now because we're, down Corkscrew Road. All the new developments are. There's a lot of new construction. So that new construction discount is the biggest. Everything's brand new. Roofs up to code. Homes up to code. So you're going to get those competitive premium out there. Now, as time passes, your home gets older. Everything ages. So codes can change. So let's say if your home is now 10 years old, you have a 10-year-old roof. What I highly recommend doing is getting, even if you're not selling the home, get an updated 4-point inspection and an updated wind mitigation report, because these reports will show that your home may have certain things that homes older than that may not. So things like your secondary water resistance, that's not automatically included once you get outside that 5-year mark of the age of your home. Sometimes you need to show proof of that secondary water resistance. So that's where that wind mitigation report will come in handy. Also, your opening protection. Do you have hurricane windows, hurricane doors, all those things? That's a big discount also. So that's all going to be shown on the wind mitigation report. And as your home gets 10, 15 years older, things like your hot water heater, you're going to update that. Your HVAC system, you're going to update that. You're going to want to show that to the insurance carrier to get additional funds off. So that would be completed through your 4-point inspection. That'll show all the updates and upgrades you've done. So little things like that will go a long way when it comes to insurance premium.
Yeah, that's definitely something we recommend to all of our buyers to do the 4-point in the wind because
Yes,
that will give
I
them
good.
what they need. What
Yep,
they need.
for sure. And it's all I think they range anywhere from I think $100 to $200 to get those reports done. So I highly recommend doing them. It's only going to help you in the long run, because even if you don't need them right then, you'll have it 5 years from now. If you go to remarket with another company, you have all that information documented.
That's awesome. That's awesome. Now, we've come across polybutylene plumbing here in the area, and that is a hard no go for insurability of the house, which
Correct.
means if you are getting a mortgage, no go there either. Are there any other things that you should be looking out for as a home buyer other than polybutylene plumbing that is
Yeah.
a hard stop?
Yeah. That's a hard stop. There's also knob and tube wiring. That's a big one, which I have, my 6 years of doing Florida insurance, I have not come across a home with knob and tube wiring. I'm assuming it's because, the codes change in Florida so rapidly that those particular homes are so old now that I don't even think it exists anymore. Yeah, the polybutylene, that was that that's rare. I think I think in my 6 years, that might have been the second one I've seen in 6 years. So, but that
On
actually,
3 deals.
yeah,
Yeah.
yeah,
Mostly it's homes built in the 90s,
exactly, yeah,
and they have updated the seller's disclosures now, so the sellers are actually have to disclose if they have it or not, but a couple years ago, that wasn't even on the seller's disclosure, and a lot of sellers didn't even know if they did or not.
right.
So
Yeah,
Now it
it's
kind
not
of
something you would
asks.
visually. Yeah, you wouldn't be able to visually see that, without a
Exactly.
thorough
So now they're
inspection.
forced to answer, do you have it or not? And they go, wait,
Hmm.
do I have it or do I not? And then if they realize they have it, that's something that you have to have replaced in your home, I would say,
Correct.
before you even list your house. So,
Yeah, absolutely. And actually, that's, every carrier that I go to for marketing, that is on every underwriting question sheet. So that one has to get answered. And the moment you say yes, coverage gets declined. I don't know the cost for repair or something like that. You'd have to talk to, a licensed contractor, but
mhm.
I'd imagine if it is your dream home, if it's something that, if it's a home you really want, hopefully it's not too expensive to get fixed.
Yeah, I mean, it depends, of course, on the size of the home, but I would say probably $10,000 plus.
Oh,
So,
wow. Okay.
yeah, yeah, it's a bigger ticket item.
Okay.
Um, kind of taking a step back, where do you see the future of insurance going here in Florida? You mentioned that home carriers are kind of coming back. Are we going to get a little relief, or if you had a crystal ball? And we're not
Yeah.
privy to this, but if you had a crystal ball, what would be your guess?
We need to see a serious break in weather. We need to see a couple years where these carriers can kind of level off, get all these claim scenarios done, and paid for, so they can kind of go back, because all these insurance companies, they also have their own insurance. They have their reinsurance that they have to pay. So even the reinsurance companies' prices are going up on these carriers. So when that happens, their prices go up. That means our prices go up. So we need it to start at the top and then the trickle down effect. But we definitely need a break from this weather. We need to. I mean, this past summer, I think we had a 10 days between two hurricanes, maybe 2 weeks, something like that. And they were scary, and they ripped through Tampa. And although I know we're in Southwest Florida, down here, Naples, Bonita, Estero, Fort Myers, but
Mhm.
even, damages in the Panhandle, damages in Tampa, damages in Jacksonville, they affect us all. They distribute the losses amongst all the policyholders. And I know there are some people that think that's not fair. I get that. It comes down to the fact that, number one, if you're using your insurance, it's not for something fun or happy or joyful. It's something unfortunate has happened. And then at the end of it, let's say you did have a $200,000 loss on your home. Do you think it's fair that the carrier comes back with, well, since, we just paid a $200,000 claim, you've only been paying $12,000 over the last 3 years for insurance. We're going to jack your rate up to $20,000. It's not feasible. So that's why the losses get distributed amongst everyone, because, to have one person make a claim and then have to, if the carriers individualize that person, say, now you owe us $25,000 a year for the next 5 years so we can recoup, it's just not fair. So if we just need a break from these storms, believe it or not, last year was the worst year we've had. I know a lot of my clients felt the heat on that. And, we did a lot of remarketing this past year. But this year we're seeing maybe 10 points less in percentage increases than the year prior. And I know that sounds like a lot, but when you're getting 50 to 75% rate increases and you decrease it from 50 to, let's say, 30%, I hate saying that feels better. That's a good thing, but it means we may be trending in the right direction. Carriers are starting to get their solvency
Yeah.
back and getting, restructuring, getting stronger. And so it's crystal ball. I'm going to say I see a light at the end of the tunnel. I'd like to say our premiums are going to start having maybe less rate increases, but again, it's so weather driven, and we've seen all these weather patterns, whether it be here out west in California with the wildfires.
Yeah.
That also is going to affect us, because some of the national carriers are in every state. So that means their losses get distributed amongst all the policyholders. So we're going to feel it no matter where the weather patterns are. We just need, specifically this area, we need a break. We need a serious break.
Yeah. This might be a stupid question, but I don't feel like my homeowner's insurance premium has doubled or gone up as much as what you're saying.
Mhm.
Why is that?
Well, every carrier, so that's another good question. So every carrier, actuarially, they all have their own rating and how they come up with their premiums, and it comes down to their solvency. Now, the carrier you were with could have been a little bit on the higher side when you purchased it, and it could have, where all the other carriers are much less, but there's that balance, right? So they're all trying to, like, be in a relative balance of each other, but your specific company, it was a little higher when you purchased it, but now the other companies are starting to realize we had a premium so low, we need to catch up. So now all of a sudden so it's like it's a constant battle between all the carriers where they are as far
And
as
there's
premium
nothing
goes.
that you can do to lock your rate in or negotiate that lower or anything like that, is
Yeah,
there?
just during the policy, once you have your policy term, that's the rate for the year. It can't increase midterm or anything like that. So that's when you get that renewal notice anywhere between 45 to 60 days in advance, showing your premium change allows you time to either remarket your policy, or if you're happy with it, stay with it, get it paid, and move on. Um, but yeah, it's a tough thing right now as far as premiums go, especially with all your companies that came in so low.
Mm-hmm.
Some of those carriers are moving out of the state altogether because they just didn't put enough premium in their policies
Yeah.
to cover themselves.
Yeah.
But luckily, we have some exchange programs coming to the market. And what I mean by exchange programs is that you'll have your standard carriers of Florida that have been in there for 20, 30 years. And they're creating these exchange programs, which means these companies are now owned by the insureds. They're mutually owned by the insureds. So the carrier itself gets a tax break from the government, which allows for cheaper rates for the consumer, which is great. But, in the event of a large loss, again, the losses get distributed amongst all the policyholders. When you go to an exchange program, you could feel that heat a little earlier, a little faster, a little harder. But let's say if your company that you're with has a couple claims-free years or very low claims, there are even dividends that come back to the consumer. I mean, are they going to be $1,000 dividend checks? Probably not. Maybe $20 here and there. But
Right.
it's just something that keeps the rates a little more competitive, because right now, if you want to buy anything near the water, anything remotely close to the beach, whether you're right off 41 or along the beach line, I mean, I have policies that range anywhere from $10,000 to $25,000 a year for home insurance. So, I mean, as a purchaser, do your due diligence, do your research. Call a local agent like myself or somebody else,
Yeah.
and have us do the marketing for you. Take that pressure off your desk, because you're going to have plenty of things going on when it comes to getting your loans organized, getting your money moved, and for getting your storage facility, getting your moving trucks.
Yeah.
Use us to take a little bit of that
Yeah.
hardship off.
Well, that's a very good segue. I was just going to ask you, because everyone's coming from different backgrounds and different situations. They might be from Connecticut, they might be from California, and they're used to all sorts of other kinds of crazy insurance that you need to have out there relocating here. So everyone's comparing from a different background,
Right.
and they have different situations and needs. So how does somebody reach out to you to get a better idea of what they're really looking at, for insurance here in Florida?
Well, I don't know much about, I mean, I think California is a good example because, they have deductibles that cover earthquakes, for instance, right? So that's not something we see that often here in Florida. So we don't, there's no earthquake deductible. We do have sinkholes. You can add sinkhole coverage, but it has to go through a team comes out, inspects your lot, inspects your land, see if there's any sinkhole activity. If they do find that there is sinkhole activity, unfortunately, it's a hard stop on getting it, because that means there's a chance it could happen, and unfortunately, the coverage wouldn't be available. Now, with all these new communities going in, that's part of the testing before the slab gets poured. So they're not going to, that's one of the big things they look for. And most likely, more than not, they're not going to be building homes in areas that have high chances of sinkhole. Luckily for us in this area, knock on wood, we haven't seen that. That's something, a Californian or a New Englander or
Yeah.
a Midwester, they're not going to think about sinkholes, things like
Right.
that. But we do have things called, every policy comes, it's automatic. It's called catastrophic ground collapse. That's where we're all on sand here in Florida. It's all sand, so you're going to have a lot of settling over time, and as that slab settles, so does the home. And with the concrete block that we have, that may show some cracking here and there. And if it's significant damage, that is under a home insurance policy. But sinkhole would be an added rider that you can get anywhere. I think it ranges anywhere between $100 to $200 a year for sinkhole coverage. But fortunately for us, so far, we haven't seen much of that activity in our area.
Yeah. Yeah. So if somebody wanted to get more information on how, what their hypothetical insurance costs would be
Mhm.
here in Southwest Florida, and you're licensed in what states? Just Florida and Connecticut?
Florida, Connecticut, Massachusetts, and Rhode Island.
Okay, so in any of those states, if anyone wants to get in touch with you for help with their insurance needs,
Mhm.
how should they reach out to you?
Yeah, I have a direct line. So my phone number is 860-302-9455, or email. It's my first initial J and then Mongillo, Mongillo, at flcasualty.com. So the abbreviation for Florida, casualty.com.
So we'll put that on the screen below so it's easy for people to copy down. But thank you so much for your time today, Joe. This was
Yeah,
a
thank you.
wealth of knowledge,
Yeah.
and I hope that this just helps anyone who's considering a move to Florida or considering a move even within Florida and evaluating flood zones and just other aspects of homes, that this just gave you additional resources for consideration. And if you have any questions, feel free to reach out to Joe. If you want to talk more about real estate, I would be happy to help you. You can reach out to us, and I'll put my number at the screen below. But thanks so much for your time, Joe.
All right, my pleasure. Thank you so much.
Bye.
Bye.
Wasn't that so helpful? Thank you so much for taking the time to learn a little bit more about insurance here in Southwest Florida. If you'd like more information, check out the descriptions below for information on how to contact Joe directly, as well as how to reach out to my partner, Amanda Bolduc, and I regarding all of your Southwest Florida real estate needs. Again, my name is Kelly Olin with Residence eXp Realty. Make sure you like this video, subscribe for more videos like this, and maybe put a comment below. Let us know what you learned in this video today. Thank you so much for watching, and we'll see you in the next video.